A wonderful good morning, ladies and gentlemen, and welcome to NAGA and Markets for Breakfast. My name is Alex Duvidari, and today is Monday, the beginning of a new beautiful week. It is November the 18th, 2019. And yeah, if there's one thing that continues to very clearly overshadow the markets, whether you see it positively or negatively is up to you, I suppose. But the markets are going positively. So we see it really all across the board of the equity sector. So we saw the S&P 500 show absolute all-time highs, and I want to look at the charts here for a moment, just to that we can have a look at where we are. This is the 30-minute. We traded well above the 3,100. You can see that Friday was a very positive day after it started a little bit with jitters, and I'll get to the fundamental reasons in a moment. I just want to also go through the NASDAQ here to show some similar pictures. NASDAQ obviously, even like in a way, it's even the more sought after asset class, being the tech industry is very much the leading sector wherever you look at. This is how we are now, 8,300. And also then on the Dow Jones, obviously, the classical index, the classic US index, that has reached a new all-time high of 2,800. And people go always pretty crazy on round figures, and maybe we'll see the 30,000. I remember like how hard it was to wait for the 20K not even so long ago. Here we go, you have the 20,000, and it took a while really to get there. You can see like the market went up and then went for a while before it got to here, before it got to 20,000, and everybody was asking like when it's going to happen, and now we're close to 30 already. So that's really crazy. And the reason is that we still think that or the market still holds on to being hopeful about the US and China to be able to finalize a phase one deal, which is by now long overdue really, but still the market is very much in positive expectancy for it. And we also see that there is more liquidity coming back to the market. So we definitely are seeing more market participants back trading. While, remember, just a few weeks ago, we had so little volumes in the market that was not really a positive sign. So everyone was asking, like, what's going on? Why is everybody not trading? And now we saw commitments of a number of banks, JP Morgan, that have definitely changed over to risk on, especially after the central bank, the Fed, reinitiated their non-QE QE, so call it whatever you want. It is a QE. And even now over the weekend, back to that big trade deal, we had constructive senior level discussions, as we've heard, and it involved Steve Mnuchin of the Treasury from the US and Robert Lighthizer, and they spoke with Liu He on Saturday, the vice president in China. So and that was confirmed by the Chinese Commerce Ministry. So we'll see what's going to happen here. So an agreement was reported to maintain close communication. And that's why things are looking like they might really actually happen, even though we don't know until we know, right? And that's kind of the thing. We did hear Larry Kudlow last week say, and he said it so many times before, that the US and China are in their very last final inches of finalizing the deal, but not done yet. And then there was also another positive driver in the US. And it's funny because there was good and bad, but the market only focused on the good. Okay, I can't go back here to, can I? Of course, previous week. Here we go. It just needs to load also. Here we are. So we want to see Friday. So because what did we have on Friday? We had in the US the retail sales, and they came in with better, with 0.3 instead of 0.2, and that was rather positive. Here we go. 0.3. even though, here we go, this is the number I'm looking for. It shows only in black. It's because it comes within expectations, but it comes from 0.2 expectations, in fact. So that was a positive, even though what we see is that the industrial production is really down, and that's down here, Fed industrial production by 0.8%. And that shows that the manufacturing sector is hit the most from the present situation. Now, some say that number may have been influenced by the General Motors strike, and it's its lowest reading since 2009. So it is a red flag, but many people will say, yeah, it's probably a one-off because of the GM strike. Don't overinterpret, it'll be fine. And that's why that number is probably disregarded, or has been disregarded. Obviously, as we can see, stock markets continue to go higher. And we'll see how things continue then this week, especially on that trade talk development. Also, we see that, let's look at some currencies here, so to have a little bit of an outlook. So today, I think euro dollar is very, very interesting. Why is euro dollar interesting? Because, first of all, we have a new ECB Lagarde that is going to have a report later this week. And there seems to be a lot of opposition within the ECB in terms of why they do not necessarily agree with that very, very low, basically negative monetary policy here. But the euro is at an inflection point. Very, very important. We need to see if we see the 111, in my opinion. If we see like a daily close at the 111, and chances are we could really see that. The dollar could come further down on more easing perception in the market, and more trading out of risk off. So that could really help the euro to take chances this week. And maybe even Lagarde will say something that will reassess the current monetary policy. Anything like that could be extremely helpful for the euro to reclaim the 111 and maybe higher from that. So that's definitely something that we should keep an eye on, and that we should see also here a positive movement. Also, the euro could get some help by the pound. And the pound, let's have a look here. You can see that on a daily that the pound is trying to trade back up towards the 130 level. That's the important resistance area. You can see that recently we've been rejected at the 130 a few times, tried but not reached it, and maybe now is a new attempt to do it. And what could be the reason for that? Well, obviously everything is about the UK election now, and the Brexit party has stood down from 43 non-Tory seats. And so more or less what it means that the Conservatives need 326 states to obtain a majority versus the 317 seats they currently hold. So it's not too much, so all they need is an extra 8, and they'd be able to secure a majority and basically finally have a stronger mandate to execute on their wishes or on their agenda for the Brexit proceeding. And that has been the problem in the UK for a while, that it has not been really governable, if that is a word, because we've always had these big opposition. So all the Conservatives needs is 8 extra seats as things look right now. And if that really happens, that could push the pound decisively higher, or an expectation that we will finally see a development in the UK that can really get us close to the Brexit. Elsewhere, we see that the Australian dollar continues to be pushed to the downside. And look, we saw some mild attempt on Friday, but at the end of the day, the pricing in again of the next rate cut on the next meeting is still ongoing. And the reasons for that remain the same. Like, okay, even China now said overnight that they are going to add more stimulus. So a limited stimulus, but they said their industrial production stays soft. They see a sluggish investment as growth growth keeps slowing down. So there is some sort of a little bit of a short-term pressure, and they want to handle it by, obviously, like everyone is, flooding the market with money. But what it says is that it's evident that the Chinese economy is not doing so well, and that is why the Australian dollar cannot help or hope to get some risk sentiment support by any means. On the contrary, actually, and its own story with its own bad labor market is not really helpful. So the Australian dollar has a good chance to continue to the downside. Looking at the dollar yen also, because that's our favorite risk barometer, if you want, or indicator, and we can see that. So we have really a lot of resistance here. And let's go on the hourly, maybe. That can help us see things a little bit more clearly. So because I want to show you something. So we continue to trade around that area here again and again and again and again and again. So that 108, 80 level where we are right now, that's so important. And we were not able to get above it. And really that area, the same area, was also support area from before. If that area breaks to the upside, then there's probably good room to move up to the 109, 109.10 easily. But if we continue to fail here, then we could easily drop back to the 108.70 or 108.60. So that's really very much dependent on the further story that happens here. And, has a lot to do with the trade war at the end of the day. But those are two technical levels I would definitely watch. So get above the 108.90 would be a very decisive sign to the upside, and drop below that 108.60 or 70 would be very decisive to the downside. So those are levels I would definitely watch in the dollar yen here personally. Elsewhere, what we also see is that on the crude oil side is that oil is pushing up. And the reason why it might be pushing up is that it's getting ready for the biggest IPO ever. So Saudi Arabia cuts its Aramco valuation, so it's not going to be a $2 trillion company any longer. So they're seeking now a valuation of only 1.6 to 1.7 trillion. Poor guys. Still a huge amount. And, we'll see how that will go. And obviously they need and want a higher oil price for that. And the oil price was able to set back again into that 58 level. So once again, that area here is this decisive resistance area that we have here around the 57, or let's say 58 to 59. That's really the biggest resistance area where oil was not able to get above. But we can see now that we have reached a new high in this, pretty much sideways trading of the all last week, and the hopes of the Aramco IPO or the interest for it could push oil a little higher. So be also prepared for this one. Looking at another commodity, which is gold, obviously, it's not looking all too positive because we see a lot of positivity in the risk-taking market. So if we have risk-taking sentiment in the market, then we don't need basically safe havens. And that is pretty much the situation now. So we, again, basically the lows of last week, those are the ones to be watched. If we drop to those, then we could very easily also try to poke a hole for the first time in this kind of support area at the 1440. If we stay within that level, that would mean that no China-US deal comes to a head. But if it comes, then gold could actually see some downside back to the lower 1420s, actually, back to the trading range of last summer. So that's something to also keep an eye on, especially in the midst of that trade war going on, or finding possibly its first level of resolution. Looking at the cryptos, it's a little bit more tricky. So you can see that Bitcoin is down 2%, Ripple is down 4%, Ethereum is down almost 1%. So Bitcoin fell through that 8.5K support on Friday already. Wait, I need a daily. Here we go. and it tried over the weekend to somehow get above it again, and you can see we're very, very close to it. So it's the fight about the 8.5 that's currently playing out, but we've already traded lower. So it looks like, look, this support area here, we're already traded lower than that. There is a big attempt to try to bring it back up, but it's so far not even close to successful by any means. And here you can see that's the support area or resistance area when we traded all the way up, and we're already trading below that or on the lower end. So the 8,400 would be the next decisive area to watch. That could, if broken to the downside, lead to more declines towards the 8,000, as it looks like the whole crypto sector is a little bit under pressure. Yes, there is some, let's just say, exotic or more exotic altcoins that are taking an advantage of it. So the Bitcoin dominance went from, I think, 66 to 63%, or 69 to 66, don't quote me, but it lost about 3% on the total market cap of cryptos. So that shows that other altcoins aren't taking an advantage of it, but it's not the big ones. You can see all the big ones are actually rather hurt, and it looks like the bear market continues to be fully in place here. Looking at the calendar today, what we can see is that there's not awfully much here. We see ECB Vice President speak, but really it's a lot more about what Lagarde is going to do later this week. And the biggest story remains around what's going to happen in the UK and obviously the trade situation in the US. And let's just say this impeachment story, which I haven't brought up so much yet in my morning calls, is another, not positive factor for risk taking, but it's not influencing markets by any means at the moment. So that's why I haven't really brought it up so much. So that's my overview at this beautiful beginning of this week on November the 18th. As always, thank you very much for listening in. And if you like our calls, please make sure to subscribe, hit the like button, and use the comment to let me know anything you'd like to discuss yourself. Thank you very much. Bye-bye.